Hey, good morning, guys. Thanks for dialing in. I'll go ahead and jump right into it. From a news standpoint, as far as new news flow that people probably haven't heard, yeah, it's quiet. There's really nothing out there that is uh, that's new to the market. I think the biggest thing is China has continued to buy. I think we posted flash sales 13 straight days again from China. So their buying has continued even though prices have been rallying, and that is really pretty bullish. But I think the general theme is harvest has started. New news is slower to come by until we figure out exactly what we're dealing with harvest, and then we're get kind of recalibrated. I read one thing that said that the rally that's happened so far has been on what might happen, and now it's time to pause and figure out if it's true and if those bullish fundamentals really do materialize. So I think there's probably some truth to that. I mean, we don't know what the crop is yet. We really don't know what's going to happen in South America. We don't know how many acres they're going to plant. We don't know if their crop's going to burn up. We just don't know a lot of things about the supply side. The only thing we do know for sure is that China has been buying, and they've been buying an awful lot of product. So, um, so I think that keeps our downside pretty limited. All right, here's a chart of corn. We talked about this last week and sent out a quick little snippet Friday. This move to the upside had been maturing. It's got a long list of sell signals right up here, including these divergent signals down here. For those of you that don't know what divergence is, it's when an oscillator is working opposite price. So as you can see, price rallied, right? We rallied from 320 clear on up to about 380. And the oscillators down here, this one in particular, didn't go with it. So the downward trend line on that oscillator is telling you that volume was actually decreasing and buyer enthusiasm was actually decreasing through this uptrend. That's what these indicators do. They kind of measure excitement, because this is taking into consideration both price and time, or both volume and price over time. So if you have fewer buyers buying at the high than you had earlier in the move, we call that divergence, and you don't want to be the last guy to buy the high. Similarly here, this is tracking moving averages. And when the moving averages are pulling apart from each other, fast moving averages pulling apart from a slow one, which is what these two lines are, that's showing that the bulls are getting stronger and stronger. And when they start to converge, it's telling you that the bulls are losing a little bit of their strength. So, so when these indicators start to diverge from price action, it's a warning sign of a coming sell signal. Then you get some additional ones, and they just confirm and reinforce each other. So we had that with corn, that matured on Friday. So the question is, what comes next, right? We don't tend to move in straight lines. We all know that. So it makes sense that we may sell off a little bit. If we're selling off, we're now looking for some support and resistance levels. And if we're looking at support, we can look at the Fibonacci retracements to get an idea of where buyers might emerge. So your 38% retracement level from this move that started on August 12th comes in at 356. That's your first target. Second target is 350. Third target is down here at 343. This is the target I favor here. I favor a move down into the 340s, and here is why. See this gap right here? This is a gap that's open from 345 down to 347. I really think that, well, I don't think, I know that corn gaps have a tendency to get filled. We talked about this gap that occurred in July, and we talked about all the way down that the odds highly favored this gap to be filled. It did that, and then it gapped again and kind of created an island right in here. If you look back historically, corn has an overwhelmingly high probability of filling a gap. So I favor a 61% retracement here. And that puts this low to me right here of very, very high importance, which would be 335.5 on December corn. I think anything above that is probably really just a pullback. If we can't hold that after closing that gap, then I think we've got something else going on, and we need to think about it. Another reason that I think that this pullback favors a high retracement level is that if I'm going to take this off here for just a second because I don't want to get too cluttered. If you measure from the low to this point right here, okay, so we're kind of breaking this down into waves, if you will. If you measure from the beginning of this move to where we had our first little pullback, we pulled back to 38.2% on this one. Can you see that? You can see that blue line right there. Zoom in just a little bit. We came back to almost a perfect 38.2% on this first little pullback. A general rule of thumb is that once the move has matured, the next pullback is going to do the opposite of what the first one did. So if the first pullback is 38.2%, then the second one would follow to be 61.8%, which, as we just talked about, puts us right back down in here into this gap level, puts us all the way back down. So I favor a move all the way down into the 340s with corn and would still consider it to be bullish. So if you're looking to re-own bushels that you've sold, I would say a good spot to do that would be down in here into a challenge of this gap and into that 50 to 61.8% retracement levels. I'm not saying bet the farm that it might go higher there. I'm saying probably don't panic, because odds would then tend to favor that we may come back and re-challenge some of these highs. And if the crop is short and China keeps buying, and we need to start buying acreage into the winter, then it's going to come back and re-challenge these highs and probably even set new ones. If those fundamentals don't materialize, then we could it become range bound from 330 to 380. And we won't know which of those is going to be occurring until we just get more information. So I think you can be very, very patient. If you're looking to re-own, this is a great level to start looking at that. If you want cash and need to deliver and get some cash soon, this is a great place to have some marketing done and get some sales on the books. So that's our look on corn. We will keep you posted if anything changes there, but let's move on to soybeans. All right. Soybeans, kind of the same analysis. I've already got your retracement levels up here. We talked a few weeks ago about this level being very important at 380, right at this 380, 383 level. We talked about the importance of this because this is where we were when the trade deal was signed, right? And we know that a market will generally retrace 38, some sort of Fibonacci relationship in here, 38.2 down to 61.8. And so we were kind of guessing and saying, all right, let's back into where do beans have to trade in order to get to be able to retrace 38.2% and maintain this high? And we guessed about 1050, and that's exactly what they did. I wish we could say that that was because we said so, but I don't think we had anything to do with it. We were just guessing, and just trying to kind of think through what a logical move in the market would be. So I think beans have a short-term top here. I think that they're going to find some retracement level. I think all eyes are down here on this 385 to 375 level. And if we can hold those levels, then this setup is set up for a move higher. Here's why we think that. We don't have all of the same sell signals that we had in corn. And remember the whole divergence thing that we just went through with corn, where you're looking for the oscillators to get less enthused and into higher price moves. That has not happened in beans in any way, shape, or form. In fact, come all the way back to the contract lows. Every successive high from the contract lows has been met with higher oscillator readings, which means that the buyers have become more exuberant, more enthusiastic. And typically you won't see, you can see this high here, right? We peaked out at 865 and here's your peak. Now we moved the market higher and the buyers got more excited. We moved the market higher yet on this peak and the buyers got more excited. All the way through, we've had higher excitement levels. Just because we've sold back down, it doesn't mean that the market has gotten less excited. All it means is that we were overbought and we were due for a little bit of a pullback. And so as this oscillator line descends to its zero line, which hopefully will happen about this 38.2% retracement level, right down into this zero line, that's a prime entry opportunity for it to re-challenge its highs. Because remember, what we're looking for is the price to make new highs, confirm those highs with sell signals, and fail to make new highs on these oscillators. Then you would have divergence. And that's exactly what we're looking to have happen here in soybeans. And I have no idea where that will be. There's a lot of talk about a pullback will be a wave 4, and then we'll have a wave 5 higher that counts to above $11, which absolutely could happen. I'm not going to take that off the table because, like we've been talking, if we get into harvest and we find out that the yield is under 50, then our carryout gets to very, very tight supplies, and we're probably going to push this market a lot higher. And it's setting up perfectly to do that. If we get into harvest and we find out the yield's 52 and our carryout 600 million bushels and China stops buying because we pissed them off and we're in a Cold War, then we're probably stuck. This is probably the high and we're not going to go anywhere from there. But at the current moment, the risk reward tends to favor buying a pullback down into here and even all the way down to 61.8%. I don't think that's likely here because of the support levels that it's got to get back through in this 983 level. But if it does, you want to look at re-ownership or whatever into these reversals. So hopefully you've made some sales into this rally. You got to reward it when you need cash. And but as far as a re-ownership standpoint, 380, 350, those are areas that we want to be looking to buy. All right, let's take a look at Kansas City wheat. And I want to revisit the whole divergence discussion, okay? We can see the move from the low. The move higher was met with higher highs all the way up until Friday's high. Friday looked like all systems were go here and that we were going to blow through and take this to even higher ratings, which would have created a new up move. And then Monday happened. This is Monday's bar right here. It opened with a gap open higher and just immediately started to sell off. And and that turns out to be a giant engulfing bar. It traded outside the prior day's full range, and it closed below the lowest point of Friday's range. So this is a big nasty bar, and it created divergence on these indicators down here. So there is a chance that the high in wheat is in here for a little while. And if we start to take out this 383 level, then that puts 363 and maybe even 443. This isn't corn, this is wheat. 463, 443 back in sight. What are those on the retracement levels? Let's just take a look. Here we are. So a 50% retracement is 464, and 61.8 is down here at 354. So wheat really needs to work itself higher soon, or this is going to start to look an awful lot like a top and into a downtrend. So I think wheat is just stand back and wait and see what it wants to give us here for a little bit. July wheat is trading at 511. So we may have peaked out there depending on how many acres we choose to plant. So we might look at setting some floors on wheat if you guys are going to be heavy into wheat here coming forward. All right, that is what I have for you today. I hope that was helpful. If you have any questions, let me know. We're in a little bit of a wait and see pattern and a holding pattern until the next opportunity presents itself. And when it does, we will let you know. Have a great day.